Minister, thank you very much for joining us on Bloomberg Television. Brent crude rallied almost 30% in the last quarter. At the moment, we're around $90 a barrel. How is India dealing with the higher energy prices, and what new solutions do you have to sort of offset the impact?
It shouldn't surprise you if I tell you that India would prefer a lower price. But I think the real issue is not how India will deal with it. India will deal with it. India is a large economy. We have been able to deal with issues relating to availability, affordability, sustainability. We'll do it. But there are parts of the world where rising oil price is going to create, I used the expression in another meeting, organized chaos. I would say devastation. As it is in the last 18 months, increasing prices have taken something like 100 million people into abject poverty. So there are parts of the world, I think half the world is, I wouldn't say in recession, but it's flirting with recession. You know, one quarter slightly up, another quarter slightly down. So I think it's in the interest of all countries, including the producing countries, certainly the consuming countries, to have a healthy discussion on what constitutes a reasonable price band.
All right, so why don't we do that now?
Why
here?
don't we do it? Why don't you and I solve the problem?
So what is that range?
I would certainly think that all the arguments that you get, that you need money to reinvest, etc. I mean, the price needs to go down. If they need a remunerative return, yes, I think that's a good idea. But I think something around $80 or slightly less is a much safer bet for them. Because the fear is, there was a time in 2008 when the price went up. And you know what happened after that? Crashed. It crashed.
Squeezed demand out completely.
Exactly, because with the amount of inflation and inflationary surpluses which are there in the global economy, in the large economies, where interest rate hikes are not being able to mop up that excess liquidity, and interest rate hikes take place, you will have a situation where high oil prices will repeat the 2008 scenario.
India is going into an election period. Does that limit your ability to pass on the higher energy prices to consumers?
Well, listen, I am not in a position to tell you what India is capable of, but I can tell you what India did. In the 2-year period before this, when global oil prices were increasing at the rate of, say, 40-50% in North America, they were going up 70-80% in South Asia, India was able to bring the price of petrol at the bunk down by 5%, diesel by 0.2%. When the rest of the world, they were all increasing. Why were we able to do it? Because on 2 occasions, the Prime Minister, through decisive, bold action, was able to reduce the central excise duty that he charged, and the BJP-run states decreased the amount of VAT. So you have a very interesting situation in India. There are some states where the price of petrol at the bunk is higher by 11 to 12 rupees a litre. And you don't fill up just 1 litre, you fill up 30, 40, 50, depending. So India has been able to navigate it, and I have no doubt that India will be able to navigate it further. I wouldn't worry about elections. By the way, India is not only the world's largest democracy, a very robust one. We have election every few months. If not at the center, we have once in 5 years. Well, we have them in the states.
I thought I'd get you to weigh in on that. The other thing I want you to speak to is diversifying the sources of your imports. And you've made it clear that you're going to go out there and you're going to find cheapest barrel for Indian citizens. Where is that today?
Today, I'll tell you, let me give you an over picture. We used to import from 27 countries. We are today importing from 39 countries. Secondly, governments don't buy oil. I mean, I just want to use your influence to get it across to your viewers. It's oil companies that buy. Oil companies typically buy by floating tenders. Say, we want oil delivered at our doorstep. By doorstep means the port. We will float the tender. Now, whoever is able to supply it at a lower rate, why would anyone buy oil? First of all, the provenance of oil. I mean, when you step out, when the language you use, I can make out. Are you Canadian, English, British, American? Oil, you never know. I mean, we own, say, a stake in oil in one country where we own 20% of the asset. We don't see that oil. The oil is extracted from there, it's immediately told to somebody. I don't know where he sells it. He doesn't come and ask us, as long as I get my return on it. Equally with oil, I mean, some kinds of oil are difficult to refine in our refineries, some are not. So we've said all along, that that is our companies, both in the private sector and the public sector, will buy wherever they get the cheapest barrel. And I think they've done very well at that. Okay. There was a time, out of the 5 million barrels that we consumed every day, we had about 5 countries or 6 countries which were each selling us 800,000 barrels a day. Then the restrictions came, some went up, some came down.
Exactly. So last month you had made clear that there is a potential that some of the imports from Russia could be lowered quite substantially in the coming period.
Oh yes.
But the thing is, so the Kepler data that I've been looking at shows that shipments of Russian oil to India jumped 15% in September from a 7-month low, boosted by plentiful supply and price discounts. That's again according to the data that they have, and they've been monitoring the cargoes. Is that the case? Are those shipments going up?
As I said, you and I and the data that you're citing all agrees on one thing. It depends on the discount. It is entirely possible that there was one stage where a country from which we bought nothing suddenly became one of our largest suppliers, which is the case with Russia. And if somebody said, no, we are very clear, there is a price cap in place there, we will buy CIF at the point of importation. I have a feeling that others, you see, OPEC, if you have a serious discussion with them, they say we don't deal with price. We only deal with the amounts of energy or crude that we let loose. But 5.2 million barrels have been taken off the market. Now, there are some suppliers who are willing to increase, who give us more. And I expect in the next 6 months the situation to remain dynamic.
Have you been applying pressure on some of your peers at OPEC Plus? Have you been speaking to the Saudis, to the Emiratis about this, to get more oil into the market?
Does the language I use give you the impression that I apply pressure? Certainly not. But well, I'm willing to tell you that I tell them that you'll have a self-fulfilling prophecy. If you want to raise the price of oil and then expect that everything will remain hunky-dory, it won't. It won't. And there is a law of unintended consequences there. So what happened in 2008? Let me quote to you a man who, not very popular in the world today, but very prophetic. He used to write in the British Museum. I'm talking about the 1840s or 50s or thereabout. He said, Hegel once famously said, history repeats itself. And then he should have added, that is Hegel should have added, first time tragedy, second time farce. So if that 2008 situation repeats itself, I don't know where this is going to come out.
What about Iranian oil barrels? What is your view on that? Given
My view is very clear. Iran is just now under sanctions. Somebody told me Iran has 45 million barrels ready on this to deliver. But India will not buy unless those problems are resolved. Equally, India will buy within the price cap. By the way, that suits me. With the price cap where it is, I will get cheaper oil. If not, I'll buy from elsewhere.